The information provided here is for general informational purposes only and should not be considered as professional advice. We strongly recommend consulting with a qualified professional to address your specific needs. We are not liable for any decisions made based on the content provided. Elevate, an audio series by Above It, thanks to Above It Money by Level Up Loans. Elevate your finances today at aboveit.com.au/money. Here's your host, dentist, investor, mum and coach for health professionals, Dr. Vicky.
Hello and welcome. Today I'll be speaking with Jamee White, who's an accomplished CPA and a credit analyst. Ooh, some stuff that I don't know about. She's a co-founder along with Daniel, and he's also a finance specialist. So they've got a really great powerhouse team. They're proficient in analysing business financials for self-employed individuals who are seeking home loans or business loans as well. They also have a close to a decade of experience or more, actually combined. I reckon it's more. And they are in the realm of accounting, bookkeeping, and have so much to uncover today with regards to lending solutions. And they really value relationships, all about relationships and about getting you to your future wealth and expanding your business as well. They equip you with guiding you through your business and your personal budget management, and they give you some insights on tax advantages and repercussions that you can use to your advantage. And one thing interesting about Jamee is that she enjoys her dogs, Archer and Frankie, leisure time with them, playing golf and regular gym sessions. All about your personal fitness too, isn't it, Jamee?
Exactly right. You've got to have that mental wellness in order to be able to perform at your best.
Welcome to today's session. I'm so excited to chat with you. I'm going to just get right into it. I'm going to ask you a few questions and see where this takes us.
Fantastic. I look forward to it. Thanks so much for having me.
So one of my questions I've got is, well, I'm a dentist, right? Like health professionals, we don't know much about finance. We go to other professionals, and sometimes we go in blindly without even understanding let's say for a business owner, understanding our reports that we get, profit and loss statements, all of that. And what's really good is that we've got professionals like you that we can get to. So my question is, well, what would be the advantage of working with a mortgage or finance broker like yourself instead of going directly to a bank for any type of loan?
Yeah, good question. We get that question a lot, especially with people who haven't used a broker before. So firstly, in comparison to a bank who has their own products, their own lending products, we have, as brokers, we have access to over 40 different lenders and lending products to suit your particular situation. So what that means is, because the lending landscape can be quite complex, so especially for self-employed as well, which can be even more complex than a usual pay-as-you-go wage situation, there's all different type of bank policies out there, and they are all completely different. They'll take in particular types of income that other lenders will or won't. So we really look to, in terms of what a broker does, we look to understand your goals, your needs, and your current situation, and we'll fit your situation with a couple of recommendations on certain lenders and products. So your situation is very well suited to a particular policy that a lender might offer. Also, in relation to other services that brokers provide, in comparison to a bank. So brokers offer a very personalised service. So if you go directly to a bank, you might be dealing with a couple of different people. People come and go from the bank. They have a lot of employees. Whereas a brokerage can give you a more personalised service. You can work with the broker and their team, and you can know that they are there to support and guide you through the whole process, the whole loan process, and beyond that as well. So for us as brokers, we also offer ongoing services. So after your loan is approved and settled, everything's all good, we make sure that we keep in contact with you. So every 6 to 12 months, we'll do rate reviews on your interest rate. And that's something that the banks don't offer. So how the banks work is if you go directly to the bank, you will get their rate at that date. However, the banks offer new customers more commonly than not. They'll offer new customers a lower rate than what their existing customers are on, and they do not adjust those rates for those existing customers. So as brokers, we can keep an eye on your rate, make sure it is in line or similar to the current market rates. And if there is opportunity there to get your interest rate down, we will do the work for you. We'll find any lenders that we might recommend, and we could go down the route of refinancing only 6 to 12 months down the track. So we offer that ongoing service as well. We're all about the client relationship. We love, learning about you. We love working with you, and that's where our service comes in as very personalised in comparison to a bank where you might be sitting on hold for hours on end and listening to that hold music. There's nothing like that with a broker.
Yeah, that's true, isn't it? I'm just reflecting back on all my sort of bank meetings and things like that, and it's laborious. And I think I've gone through like 3 or 4 different bank managers in the last couple of years. It's crazy. Yeah, I mean, one of the big lenders for a couple of my loans. Yeah, it's just really, really lovely. I love this personal touch, and I think that's really important in business. Absolutely. So let's say I came to you and I needed to look at maybe getting a loan for a home or a business, whether it's my first business or my first home. What would that look like, and what would the initial consultation be like to get that pre-approval we hear about?
Yeah, sure. So firstly, it's an initial telephone chat with one of our brokers, and they'll go through your current situation. They'll delve into what your goals are and your needs and preferences, your longer term goals as well. That's all really important for us to know, because structuring your loan is almost like structuring your business entities with your accountant. So we want to make sure that the loan structure is right from the start. And as I said, there are options to refinance down the track, but we want to make sure that you're getting the best suited loan product for your needs and your goals. So once that initial chat is done, it's usually between 10 minutes to 30 minutes, and we provide as long as we need to you in order to really understand your situation and get to know you. Once we find that there is alignment with potential lending options, we'll then gather some further information and documents. And these sorts of information will include ID, bank statements, and other information that will strengthen your application. In terms of income verification, it will include pay slips if you are employed, or if you're self-employed, it will include your financials. So lenders like to see around 2 years of financials usually. However, there are other options out there, which is another great, point to come to a broker, because some lending policies will require those 2 years of financials, but there are lenders out there that will take less than 2 years, even 6 months plus. So depending on the situation and the lending criteria, if you meet that certain criteria, there are ways to get a loan less than 2 years of trading. So once we get all that information and documentation, the broker will crunch the numbers and identify those particular lenders and products. And they'll come back to you to discuss your options. The broker will also, in addition to the actual loan and the lending product recommendations, they will also provide estimated purchase price based on your borrowing capacity and your available deposit. They'll also advise what estimated additional costs may be involved with the purchase. And that includes things like stamp duty, conveyancing fees, bank fees, etc. And they also will advise, based on that purchase price, how much of a cash deposit you will need to cover those costs and the deposit on the property. So you'll walk away being well informed, being able to make a decision on whether you can purchase a property now or in the near future. If you are unable to achieve that purchase price now, that you're really wanting, a particular purchase price to achieve that dream home or that investment property, we'll give you some guidance surrounding how you can achieve that goal in the next couple of months or in the next year or whatever that time frame looks like.
It's very
and from there, after we do that, it's just a matter of submitting a pre-approval to the selected lender if you're happy to go ahead with that pre-approval. Pre-approvals usually last for around 3 months.
Okay.
So also keeping that in mind, we don't want to be applying to various banks. We don't want to be reapplying, and it is a fair bit of work that goes into a pre-approval. So we'll only advise to go towards a pre-approval submission only if you are ready to buy now. And basically it'll be the lender coming back with a successful pre-approval and you'll be buyer ready. So it's a fairly straightforward, easy process. It's just, I think it's the initial document collection that will take the longest, but once that's all completed, it's pretty straightforward.
Yeah, and what's really interesting is that health professionals are in a different ball game, aren't they? They're kind of throwing money at us. They're lending. And I've got a little story with my current practice because I've done it 3 times for 3 new startup practices. The first practice was tricky, right? Because I had minimal pay slips to go by. I wasn't even working 6 months. So for me, I had to rely on my parents to just sign and say, if I default, and for a year, they supported me, and then I got them off the contracts after a year. So there's options like that too, right, where you can kind of speed the process up. But with
Absolutely.
us, it's really awesome that you can start a business because you're seen as capable, aren't you, as a health professional?
Absolutely. Yep, they are definitely favoured a lot more by the lenders because the lenders have a lot more confidence in your income and your stability of income in comparison to other industries. So you are considered as less risky as other industries. So there are other benefits as well that we'll talk about later.
Yeah, and you know what's really come to mind now? The proof. If you've got proof that you can run a business, that will really help you too. I was pregnant with my 3rd. I was living at my parents' house because we had moved from the country. We had sold our business. Peter and I weren't working, so we weren't employed, had no pay slips. And we were in discussions with banks, with brokers, and I heard something the broker said, and I can't remember exactly what it was, but it gave me that courage to go, oh my gosh, yes, I'm going to keep persevering. I'm not giving up on this. So a pregnant woman without a job and her husband not being employed yet because we had just moved, and with 2 toddlers as well, got a loan, and that's where I am today, where I bought my practice or my building and set up my practice. So with the right people and the right knowledge like yourself, you can achieve anything, the impossible, can't you?
Absolutely. That's amazing what you guys have achieved, and that you are just spot on there. With the right financial advisors in your corner, you can definitely achieve the goals that you dream of.
Yeah, I wish I knew you then. Would have made life much easier.
Absolutely, yes. And we get that all the time. People come to us, they have never used a broker before, and they're like, I wish I had have come to you earlier because you've just made everything so much easier. You've provided more options, more ways that we can, achieve our goals. So it's really important to have the right people in your corner.
Yeah, and from your knowledge with health professionals and borrowing, what percentage deposit do we generally need?
Yeah, so it's interesting with health professionals because they get these benefits from a couple of lenders. So not all lenders will provide this, which again is why a broker comes in as a very important part of this. However, with health professionals, there are banks that offer basically what you call LMI, so lender's mortgage insurance, is a risk fee that the bank charge if you borrow over 80% of the property purchase price. Now, with health professionals, Some lenders will actually waive those fees, which can be quite significant, thousands of dollars. They'll actually waive those fees for up to 95% of the property purchase price. So you'll save a lot of money there from not having to pay that risk fee. There's a couple of lenders that will do up to 90% as well. So it will just depend on how you fit the lender's criteria, their particular criteria. However, there are options for that, and we can assist you in how you can achieve something like that. So in terms of deposit size, it would be 5% of the purchase price plus those additional stamp duty, conveyancing costs, etc.
Yeah, and one thing that we've come across too is the plus GST in some of our purchases and sales. So be wary of that, because you might need that extra bit to purchase something, or if you're buying, you might need to have that 10%. Just depends on the business, right? From memory, whether it's an active business that you're purchasing or the building. I just can't remember. Can you clarify that? Do you know that for me?
Yeah. So just to clarify what I just went over, that's for home loans. So for business purchases, it is a different landscape again, and you usually do require more of a deposit. Again, it'll depend on lenders, it'll depend on the industry. There are a lot of factors that come into that, and that's why speaking with a broker is really advantageous, because you'll be able to get a gist of, okay, based on this industry, this is the appetite of the lenders for that type of industry. These are the risks, and then basically the lender will be able to go off, those various factors and advise on that. But usually with businesses, you'll need a higher amount of cash deposit. But again, it's just very much based on particular circumstances. Also, you having experience in the industry previously can come into it as well and be a benefiting factor. So lots to consider, and very much a per situation consideration. But in terms of residential and commercial property lending, there are very high benefits for health professionals and professionals as a broader spectrum. So accountants as well come into that. Doctors, dentists, GPs, nurses, surgeons, all of those. And again, the lenders will have different lists of occupations that do fit into that professional's criteria. So again, so many factors. It's really hard to say from a broad perspective, but in most cases, professionals are considered, what you would consider a professional.
Absolutely. That's really interesting. Well, it sounds like we as health professionals are in a really good position to excel in business, in property, in whatever we choose to invest in. And that's very exciting. Yeah. Thanks for explaining that, Jamie. I do have a question about pre-approval now. So there's the electronic type that I've come across, and you're like, oh, you're pre-approved, and then you've still got to go through this whole rigmarole of things. And there's fully assessed. What does it mean, and why does it matter to buyers which type of pre-approval you get?
Yeah, so such a great question, because we come along across this a lot. So with an electronic pre-approval, it's usually quick, it's online, it's often automated, and you can do it on the bank's website and get basically a pre-approval figure right there on the screen. And you're like, okay, I'm ready to go buy a house for this amount. However, be aware they are less accurate and less reliable, and it does not include a thorough check of your credit history or verification of financial information, which is absolutely crucial when you're looking at lending, because in circumstances, we will basically, our process when we initially obtain the information from you, there's a lot of cases that basically from what we initially ask, it's normal that clients will forget things. They'll forget they have a certain debt. There's a lot of those, sort of latitude credit cards where you go and buy that piece of furniture from Harvey Norman years and years ago. However, that inquiry is still showing up on your credit report because it hasn't been fully closed, that particular account. So that will affect, the pre-approval, the borrowing capacity, etc. But yeah, it's not a thorough check of your overall situation. It's not accurate, and it's still subject to a full assessment where the bank actually looks at it. Because it's an automated system, it's not taking into consideration the full financial situation and your current situation. It also doesn't even take into account your goals and what you're planning to do, so it just may not be the right fit either. A fully assessed pre-approval is what we provide as brokers, and that is more accurate, more reliable, and it includes a comprehensive review of your financial situation, including credit checks, verification of income, expenses, debts, assets, everything that we need in order to make a decision on your borrowing capacity. So, and that means when it's a fully assessed pre-approval, you're pretty much confident and comfortable enough to go ahead and utilize that and be able to purchase based on that amount.
Yeah, interesting, right? And what I remember now is I've had to do business plans. How do you submit a business plan if you're doing the electronic one? So how would someone go about doing a business plan? I know when I first did it, it was very daunting. Do you help with that? Do you have a guide? I know the last one I did, I had my outline, but I went on Canva and got a really nice template off there and just filled it all in. So yeah, what would you suggest they do if they have to do a business plan for the first time or the 10th time? How do you get it done?
Yeah, so that's a great question, and really great that you've acknowledged this because it's such an important part of business. To have clarity around your goals, where you're wanting to take your business, and your vision and your mission, they're key parts of your business plan. I can provide insights into how a business plan should look, the types of questions you're really wanting to think through, and where you're wanting to take the business. And it just provides a lot of clarity in terms of, referring back to that when you're in the amongst all of the business day to day, it's really good to just recognize, okay, why am I doing this? Where are we going? Where are we taking the business? And it just really helps to provide that clarity. So I'm definitely more than happy to assist with what to include in a business plan. I think it's a really, really important and crucial part of starting a business, and it will provide you a lot of clarity in terms of where you want to take the business, how you want to run it, where you want to be in 12 months' time, even 6 months' time, and just being able to run it effectively and efficiently, build a team and scale effectively.
Yeah, and we're talking numbers and projections, aren't we? And that's what a lot of us health professionals are not trained in. As you do more business, you become more familiar with that and what realistic numbers are. But that's where accountants can help you as well, can't they? They can help you with that. I remember first time I did it, my accountant supported me through that because I'm like, I have no idea. I've never started a real practice or a city practice. So yeah, just ask questions. That's what I'd suggest. Ask questions of those in your network and those who you want to be in your network, right?
Absolutely. And a business plan as well. That's just one part of it as well. What I consider is extremely important in running a business is firstly a cash flow projection. Especially if you are starting out, you want to make sure that you are all over those types of numbers. Especially if you're going into negatives and you're having to invest into your business, your own money, you're really wanting to get clarity on what that looks like, what it looks like in terms of starting the business, what costs you'll need to put into the business in order to scale and get some income coming in, and what that looks like from a cost perspective and how much you'll be out of pocket, if anything. So that's all really important to gain clarity on. And another thing is, knowing your basic numbers. So a lot of people get really stuck and are unsure of how to read a balance sheet and a profit and loss. Now, I'm not saying that you need to know the whole details and the story behind each line item, but if you can understand your turnover, so your average sales, if you can understand sort of your gross profits, so that's sales less your cost of goods sold, which could be materials or labor. And then if you can also understand your bottom line profit, that's really valuable information to know in order to run your business. So, and investments and everything, it's so important if you're wanting to grow your business. You do need to invest in your business, whether that's employees or marketing, things like that. In terms of a balance sheet, that's where your assets, your liabilities, and your equity is displayed. So your equity basically shows the overall health of your business. It could be positive, which means that the business is profiting, and that's an accumulated figure. So that's profit over a couple of years. Or it could be in a negative figure, which means that the business has lost money. And I would expect then in the liabilities section, there would be some loans, or there would be some investment of personal funds coming in from the owner. So those, balance sheet, profit and loss, cash flow forecasts are really, really crucial, especially when you are starting a business, just to get some clarity on where you stand and what you need to do in order to grow your business and achieve what you're wanting to do in the business according to your business plans.
Yeah, you've got to know your numbers. And that's one thing I didn't know 12 years ago, starting as a new graduate, new business. I was going in blind. Thank goodness I've learned lots along the way. And I want to share that with you. And thank you so much for explaining that you've got to know your numbers. That is crucial.
Yeah, absolutely.
You're listening to Elevate, an audio series by Above It, with thanks to Above It Money by Level Up Loans. Elevate your finances and arrange an obligation-free 15-minute chat today at aboveit.com.au/money.
And I know that you mentioned the borrowing capacity, and that credit cards and other loans and other commitments, financial commitments, can really affect what your borrowing capacity is. So I know there's a lot of things that come in there, but what factors specifically can affect it the most?
Yeah, absolutely. So income is the starting point. So what lenders will consider is your business profits if you are self-employed. If you are not self-employed and you're receiving a wage, they'll consider your salary. Depending on the lender, they'll also consider, some lenders will consider other sources of income, such as bonuses, rental income, investment income, and government payments. The stability and regularity of your income can also affect your borrowing capacity. So say, if you are on a wage, full-time or permanent part-time employment roles are fine. Usually with banks, they can see that that's stable, that's ongoing, it's permanent income, and your hours aren't going to change. So that's really important. Now, with self-employed, a lot of lenders will require 2 years of financials, as I mentioned earlier. However, there are lenders out there that will consider 1 year's profits in isolation as well. So I mentioned earlier that it is possible to get funding for a home loan if you have been trading for less than 2 years. We've gotten funding for people with 6 months of trading. So, and they've been able to fit all of the lender's criteria, of course, which are a lot of factors, as I mentioned earlier. But in relation to if you have been trading for less than 2 years, there is an option that we refer to as director's wages. And that effectively means that the business is paying yourself a consistent wage to you as the director for 6 consecutive months. And under this method, it doesn't matter if your ABN is less than 12 months old. So that's a potential option. And that's why it's really important. If you are thinking that you possibly do want to purchase a property in the next couple of months or the next year or so, even the next 2 years, get in touch with a broker and chat to them about what you're wanting to do, what your current situation is, and how you can work towards achieving your goals and achieving the borrowing capacity that you need to purchase that ideal next property. So, in summary, self-employed looking to purchase a property or building a property portfolio, they need both a great accountant and a mortgage broker in their corner. There may be instances where your accountant will recommend a diversion away from an initial tax minimisation strategy in order for your borrowing capacity requirements to be met. Because, as you know, with an accountant, they are wanting to try and minimise your tax, which means minimising your profit as well. Whereas the lenders want to see your profits up as much as possible. So there is a bit of a balance there, and you've got to work out. That's why your goals are so important, because if you do want to purchase a property and that's your goal that you're wanting to achieve, then it might mean paying a little bit more tax to get your profits up to make the lender happy in order to borrow. However, if you are purely tax minimisation and you've got that strategy in place with your tax accountant, it may prevent you from purchasing that next property.
Yeah, that's really interesting, because our profession, like in the dental profession, for example, and it might be across other health professionals too, we're making a transition from an SFA to employee relationship. And where people get into a pickle is when they've been working for years and years under contractor relationships, but they go to a bank or somewhere and they cannot borrow, or it's really tricky. So is that how do you suggest that someone who's like, okay, I know I'm making this income, but I am a contractor, I'm not an employee, so the bank doesn't have my pay slips per se. How do you prove that you have borrowing capacity?
Yeah, absolutely. So a lot of lenders will want to see the most recent 2 years of tax returns and financial statements if you do have them, but usually the tax returns are really what the lenders go off. And they'll just want to be able to see, okay, you've got a profit of X in this year and a profit of Y in this year. And there's a couple of ways that lenders will consider this as well. They'll either take the average of those 2 years of contractor profits, or they can take the most recent year in isolation, as long as they do basically comply with the requirements in that particular lender's policy. So, there are different ways that you can position it with lenders. And again, that's why it's important to get a great broker that does know the self-employed policies inside out. So it'll be tax returns. There are other methods, such as if you are registered for GST, you will have to do monthly or quarterly business activity statements. Sometimes some banks will consider 2 most recent business activity statements. And we've actually got a client at the minute. He's actually gone out into the self-employed world very recently in the last 8 months. And we've actually found a lending opportunity for him because he's only 8 months ABN registered. We've actually found an opportunity for him to be able to utilise his most recent 2 business activity statements, because he doesn't yet have a tax return completed for a full year. And, the interest rate is a little bit higher, so that's just something to take into consideration. You might be trading off for a higher interest rate in order to get the borrowing now. At the same time, property does usually increase in value as well. So you've got to consider all the factors, the capital growth of the property, as well as obviously what it's going to cost you month by month from a cash flow perspective. You'll have agents' fees, the odd repairs and maintenance, hopefully, insurances, things like that. Obviously, the home loan will be a cost as well. and figuring out what your net cash position is from a month-to-month basis to see if it is feasible. But yeah, there are different ways that you can consider self-employed income, business activity statements, tax returns, and if you do pay yourself a wage, then pay slips as well can come into it.
Yeah, and it is important to chat with these professionals. You mentioned the accountants and also tax lawyers. We've just seen a tax lawyer to make sure our structure is right, because I love business, and Peter and I, my husband, we work really well together, and we know that we want to expand our empire or what we do, what we have in different fields. We don't quite know exactly what yet, but we know it involves other practices at least. So we want to make sure that we are set up right so that we are maximizing our hard work, right?
Absolutely. So crucial again. Going back to my accounting days, I would see so many new clients come across in the wrong structure for their situation and what they're wanting to do in terms of their goals. A really common one is the sole trader structure. So being put into a sole trader structure to start out. A sole trader is basically where you are the business. So all of the profits are in your personal tax return. Now, individuals pay tax of up to 47% of their profits. So that's a huge chunk that they're paying in tax. That's almost half of their profits. So that really hurts if you are in that higher tax bracket. And what you can do is restructure. A company structure is fantastic for tax minimisation, because companies' tax rates are stable at the same level of either 25% for small businesses or 30% for larger corporate businesses. So that's where tax minimisation can come in. There's all sorts of factors that come into considering an accountant considering what structure is the best fit for you. There are also trusts as well, where you can distribute out income to selected beneficiaries. That's a great tax minimisation strategy too. But yeah, the common thing is that people are put into a sole trader structure. They're paying lots of tax, whereas if they were put into a company structure or a trust structure from the start, then they would have paid a lot less in tax and minimise their tax situation. And also from a asset protection perspective as well, sole traders, their assets, their personal assets, are at risk if their business was to be sued or, God forbid, but, they are at risk. Whereas a company provides that layer of protection and a trust as well. So really good to consider getting your structure right from the beginning. That's where a really great accountant that specialises in business and business entities and structuring can really help you out with that. And as I said, it's same with loans as well, structuring them right from the start. And the reason why I say structuring loans is because if you are wanting to build an investment property portfolio, in the situation, this is an example. So you've got your primary place of residence, your own owner-occupied residence that you have, which is that's not subject to any tax. So you don't have to pay any tax on when you go to sell that. An investment property, you do capital gains tax. However, in terms of loan structuring, say if you set up your loans with your owner-occupied property, you put a certain amount into your offset account. Say you had 50,000, you put that into your a redraw account. So there's a difference between an offset and a redraw. So if you only had a redraw account, you put that 50,000 into your redraw account against your owner-occupied property. And then you wanted to use that 50,000 to purchase an investment property. That's where implications come in, because basically the ATO look at that and say, hang on, that's not tax deductible. You've been able to obtain benefits without paying any tax in terms of benefits in saving interest on your personal home loan. And the ATO don't like that. So when you go to purchase an investment property and you want to use those funds to go towards an investment property, it can really muddy the waters. So, if on the other side of things, if that redraw was simply just changed to an offset account from the start, an offset account is completely separate from a home loan account. So the funds are separate, although they still work in the same way in saving you interest. But because the funds are separate, and then you go to purchase an investment property, it means that you can use those funds and they will be tax deductible. So loan structuring is really important as well, like structuring your business entities.
Yeah, and we're not saying offset accounts are for everyone. You've got to seek your specific advice.
Absolutely, because there are costs with an offset account, usually an annual package fee. So there's usually a certain amount of cash sitting in your offset that makes it worth it. So say for a $395 annual fee that the offset costs you, you'd want at least $10,000 sitting in there to save you on the interest and then to obviously offset that annual fee. And other factors come into that, as I said, what your future goals are. And that's why it's important to speak to a broker about what your goals are so we can structure the loan effectively.
Yes, I think everyone can see already how important this knowledge is, and to acquire it from someone like Jamee, it is absolutely vital that you get the right advice and you're with the right people.
Absolutely.
Yeah.
Yeah, absolutely.
Yeah, and I know we've talked a lot about borrowing, we've talked about structuring now, which I've really loved because I didn't know much about that. I didn't realize how important it was. Well, back in the day, like 12 years ago when I started, I used to just ask my accountant, well, what should I do? Oh, okay, I'll do that. Didn't question. So make sure you question, make sure you do your research and really be sure of what it is you're getting yourself into. So talk to all those professionals who are very well versed, like yourselves, like the mortgage brokers with an accounting background as well. Like, how wonderful is that?
Definitely. And I think the benefit with us as brokers, obviously with my accounting background, I can give insights into what questions you should ask your accountant and what a bit of guidance around the tax benefits and implications. I can't advise you what to do in terms of a tax perspective. However, I can give some insights and guidance into what a particular situation might look like for you. And you can be well prepared in going in and having a chat with your accountant. We also have accountant connections that really provide a lot of expertise and knowledge in this area and in property investments also. So, please feel free to reach out if you do require any of those services. And we talk about as well, it's interesting because a lot of people say, oh, it's a lot of money, but it's truly an investment and it's going to save you a lot of money in the longer term. Even in the short term, structuring is just so incredibly important to be able to efficiently and effectively set you up for success in terms of tax minimization and borrowing, and it just affects so much.
Yeah, and I know a lot of our audience has connected with everything I think we've talked about so far today. And it is because we're all very driven individuals. So health professionals, we constantly strive for the next level of lifestyle, the next level of business, the next level of career. And even that alone, we've just got to be in the right hands or with the right advice. So make sure you do seek advice. And if someone wanted to work with you or even to have a chat with you, Jamee, like we've done it together. So I'm going to clarify. I'm just echoing. I just want to clarify that are you hearing the echo?
Yes, a little bit.
Right. What can I do about this? Okay, not echoing now.
That's better.
Yeah, excellent. So I want to clarify, Jamee with Level Up Loans, we have partnered above it, partnered with Level Up Loans because we love you guys and we know you can support us, our clients, and the audience here listening as well. So we're based in Australia. So if you're somewhere else in the world, there are definitely professionals for you to chat with. We obviously have our laws, our tax laws, our borrowing laws, and all the different structures and rules around everything. So make sure you seek someone in your state, in your country, who can support you with that. And so if someone wanted to come and chat with you, what would it look like? So I'm going to pop the link here, because we definitely have this link that you can just click and fill up some things online, and then Jamie or Daniel will be in touch with you. Is that right?
Yeah, absolutely. So obviously our specialty in terms of Daniel and I is the property lending. So we specialise in that area. Daniel is extremely experienced in this space. He's dealt with a whole range of situations, every situation you could think of under the sun. So he knows a lot of the different lender policies and able to provide you with the right fit for your situation and the longer term as well. However, we also do provide business loans as well, business lending, asset lending, car loans. We also provide, things like boats and jet skis. Anything that you need financing for, we can provide that to you. We have specialists in that space that deal with those types of transactions every day to ensure that you get the absolute best out of your situation and the best lending solution. So we have also specialists in the property development space as well. Again, they deal with those transactions every day. Every type of lending landscape is different. They have different policies, different types of lenders. Especially when you're dealing in the property development space, there are private lenders as well that you can utilize. So it's a very specialized space, and our experts are here to help in terms of that space as well. So we can provide any type of lending solution. We can help you in terms of, if you were thinking of any type of lending solution, get in contact with us. We'll discuss what your needs are, what your goals are, what your current situation is. We'll get to know you, and we'll be able to basically place you in the right hands of that specialist. So we also have access to private bankers, which I think for your industry, Vicky, are very, very valuable. Private bankers will basically have all of your lending all in-house. So that could be with major banks such as NAB, ANZ, CBA. So it could be with any of those type of banks, but it's best to come to us first so that we can put you in the right hands.
Yeah, you've got the relationships established. So it really helps us skip that step of, we've got to get to know a new bank manager. They don't know us. You've got to go through the whole introduction and things like that. So yeah, I think it's cool. Yeah, because I've experienced both. I've gone straight to banks early on in my career and then to brokers, and brokers have been wonderful. And you just, once you connect with your broker, and you guys might just be it for some of our listeners, you've got to connect on a personal level. And I love that you have that goal as well. It's really vital. And you mentioned
and that's why.
Yeah,
and that's why we mesh really well with you guys too, because we really value the client relationships and we want to get to know you. We get excited about your goals and we want to help you achieve them. So there's nothing more satisfying than our clients achieving their goals. You know, we've got clients that are up to their 6th investment property. So they're building these big investment property portfolios. We actively work with their accountants so that we make the process as seamless as we can for the clients. So we work with the banks. We work with, we're kind of the intermediary of multiple different finance services. And we just try and bring the whole process to be as simple and seamless for the client as possible.
And that is extremely important for health professionals. We always struggle for time. So if we can win back time, then that's a gift. I will pay anything to have the time to do the things I love.
Exactly. And it's how you value your time as well. You need to value your time as a health professional, because what that gives back to you is much, much more than you having to go through and research 40 plus lenders and be on hold. That's not valuing your time. So you need to value your time so that then you can achieve the goals you're wanting to achieve and have that fantastic work-life balance as well.
Absolutely. And that's what I'm all about, work-life harmony. Absolutely. I do have one last question for you, Jamie. It has been absolutely eye-opening chatting with you. I saw one of your posts yesterday, actually, which really intrigued me, that you were at a conference. Can you tell me more about that and maybe the 3 key things for 2024 and beyond that maybe you can share with us here?
Yeah, sure. Really excited about this one. So this was a property outlook for 2024, which is really interesting and something I get really excited about because there's all different graphs and economist views on where the property space is heading for this year and beyond. And so I loved this one. So my 3 key takeaways for this one, firstly, is some really good news for you guys in the property space. So the increased confidence in the predictions of 2 cash rate decreases in Q3 and Q4 this year, and possibly another in the first quarter next year. So that's due to easing inflation, which is fantastic news for borrowers. It means the interest rates will hopefully come down in line with the cash rate coming down as well. And that's sooner than predicted. So they actually initially predicted that interest rates wouldn't come down until 2025. So that's really welcome news, especially for those in the property space. It's been tough. We've been assisting clients with refinancing, getting more cash into their pockets, and it's been tough. It's been really tough for us to deliver some really harsh news that people can't get into the market right now, but we're there by their side and we're there to guide them in order to achieve that at some point in the very near future. So this is welcome news. This is going to help with borrowing capacities, getting into the market, and obviously your cash flow every month is going to be, it's going to come down because those interest rates are coming down. So fingers crossed that does come to fruition. The second point was I was really interested by this one. So this was a graph showing historical data on the growth average of wealth portfolios across different assets. So those assets included business, financial, owner-occupied housing, other property and superannuation between 2018 and 2022. Who were the biggest winners? They were property owners. So the capital growth has just continued to increase at higher levels. And so property owners have been the real big winners out of any other type of assets that are generally owned by people, superannuation, as I said, even business. So obviously COVID had a really big impact on a lot of businesses and a lot of industries. So that was tough times for business in that way. But yeah, property was able to pull through extremely well. So that was really interesting, especially because I look at things, in terms of assets. A business you can very much control. You've got a lot of control over a business. You can control your levels of income. You can control the expenses. You can control everything in that business. And whereas property, you can't control where the market's going. So I found that extremely interesting. And lastly, the imbalance between property supply and demand, it's more pronounced than ever. It's largely fueled by factors like increased migration levels and increasing buyer confidence with the expected interest rate decreases coming in. And although migration is peaking, it appears it will continue to see sustained levels for some time. So that means that it's driving up rents and property prices, and it's proving the urgency that we're seeing in the mortgage brokerage at the minute in terms of investors wanting to enter the market very promptly. So we're seeing a lot of fantastic signs in the property space, a lot of people wanting to get into the market now before property prices increase even further. So if you can get into the property market now, it's a great opportunity before the influx really comes. and we're helping a lot of clients in order to achieve that very soon.
So it sounds like it's a good time to buy, in your opinion. And from what you heard at the Urban Developers 2024 Property Economic Outlook, was it a conference you went to? Yeah.
Yes, absolutely. It was fantastic. And yeah, as I said, those key takeaways validated my initial thoughts on where things are going this year. But yeah, it just really validated those thoughts.
Oh, that's so interesting. Thank you. Because, yeah, some of us here listening might be newer to the property market, others might be seasoned. But either way, it's so wonderful hearing everything we've learnt about today, because we're always looking to elevate our life and have those around us to support us. Peter and I at Above It, we are so proud to have you, Jamie, and Daniel partnering with us, because we know that we can connect others who need that support with you to even just have a free chat, and see where that takes them.
Absolutely. Looking forward to it. And we love working with people like you, Vicky, because your values align to ours. And we love the client relationship part. That's based on our client feedback. That's what they love the most. They love the communication, the constant updates, the proactiveness, and just being interested in what the clients are doing. And that's what we love. We love hearing what their goals are and what they're wanting to achieve. And we love seeing them achieve those goals. It's what makes our job what it is. So we love that.
I'm right with you. I love seeing people succeed. And if we can support others in doing that, then why not? And this might spark something in someone who's listening or new to the industry, or new to healthcare, or new to property, or getting loans or refinancing. It's for everyone. Thank you so much for your time, Jamie. I have thoroughly enjoyed this chat, and I've got some things to think about now myself.
I love it. I hope that I did add some value. I'm sure that there would be some bits and pieces that people can take away today. Have a think, and please feel free to reach out. If you've got any questions at all, we're here to help. And we love, being able to help and guide people and provide some clarity as well, and provide them some options, even if, we can't get the funds now that you need. How do we get there? How do we achieve those goals?
Yep, so true. Thank you so much. And I'm sure people will be asking for more chats with you. So get ready.
I'm really looking forward to it. We're really looking forward to it. So thank you so much for having me.
Thanks for coming on our podcast. How exciting. That was Jamee White from Level Up Loans at Above It Money. How exciting. Have a look at the links and get in touch. They're such beautiful people. And we'll see you next time.
You've been listening to Elevate, an audio series by Above It, with thanks to Above It Money by Level Up Loans. Elevate your finances and arrange an obligation-free 15-minute chat today at aboveit.com.au/money. The information provided here is for general informational purposes only and should not be considered as professional advice. We strongly recommend consulting with a qualified professional to address your specific needs. We are not liable for any decisions made based on the content provided.